Welcome back to the Train Justice Podcast, episode 402. We have the absolute amazing, great Wizard of Oz himself, all things precious metals. You know him, you love him, friend of the podcast, Pete Thomas, everybody. Pete Thomas is from our partner over there, Zaner's Precious Metals, and for all your metal needs, that is in physical storage. If you want to store them yourself, if you want others to store them for you, as in Zaner, so that they can take that pressure off you, contact Pete Thomas at the Zaner Corporation. I've known Pete for many, many years now, known Matt Zaner for many, many years now. I've done business with the Zaner Corporation for 15 years in many capacities. Love them, trust them. And so as all things trade and justice goes, Pete Thomas is your guy for all things precious metals. And Pete, before we get started in our precious metal conversation, how do our listeners contact you for any precious metal needs in any capacity?
Go to the internet, ZanerPreciousMetals.com. You can buy anything that you need right there as far as metals go. Any of the more obscure metals, you might want to call us directly, 312-605-2571. We'll try to get a hold of rhodium or some of the more unusual metals that are difficult to get. We can do that. But generally speaking, what we try to do here with our podcasts and our interviews and whatnot is because we're the real guys. We represent all of the scrappers, the refiners, the miners, the guys that are stamping coins. We deal with the U.S. Mint and all of the things that are real. We deal with, and so what we try to do is talk about what we're seeing, so that we can give you guys an idea as to the trend. We don't give you trades. We give you the bare bones reality, which is why I think over all the years, Matt Justice and I have done so well in directing his people, is the fact that we go, hey, Matt, there's a shortage over here. We're not sure why, but it is. And as it's turned out, we've done pretty well.
You know, we've had some pretty good calls on the podcast over the years, Pete. You know, gold calls, silver calls, platinum calls, you know, your cobalt
I started
call.
pounding you over the head when copper was at 210 and going, hey, this stuff's going higher. And you're going, no way, the economy's bad. I'm going, hey, we're seeing all the scrap yards are emptying, you know.
This is supply and demand issue. This is not being reported out there, right? You know, Pete, I do have a question for you to get started here. I will tell you, one of the things that we hear from our listeners, outside of all things the analysis they love, is your stories, right? The stories of 40 years in the market, 40 years in Chicago, 40 years on the floor. I do have a question before we get into the analysis, just in terms of, we were talking earlier today, and, you know, in the halftime report today, Mark was talking about some of the positive things he's seen in uranium. And it just sparked my thought process, because we were talking about it. What's the weirdest thing somebody has ever asked you to buy and store for them? It's kind of hard to store uranium bars, right?
You know, it wasn't uranium. It was cadmium. Years ago, many years ago, I had a very big industrialist contact me and said, we know you're big into metals, and we want to talk to you about getting cadmium. And I said, so I contacted the government and said, hey, I want to buy X amount of tons of cadmium. They went, it's illegal in America. It's a highly toxic compound. You can't get it. And I was like, it's for making batteries. They said, we don't care what it's for making. You can't have it. And we danced forever. And we ended up getting it in barrels, 50-gallon drums, and storing it in Canada for this individual. But it was, I mean, you cannot believe the gyrations that were involved in getting cadmium to make batteries.
Tell me, at least you charged a very high premium on that one.
Well, I charge him for my time.
Okay. Well, we know the value of your time there, Pete. Let's get right into it here. You know, let's first start with gold here, Pete. What I want to do is just kind of do a rundown of all things precious metals, get your analysis on it. You know, gold, you know, in the summer of this year, gold just was on fire.
Oh yeah.
And you know, Pete, just kind of, we haven't talked for a couple months on the podcast, and gold's kind of been on the downhill ever since then. But, you know, Pete, I don't love blow off tops in gold. It just drives me absolutely crazy. And when we saw the blow off top in gold, where gold just went from 1800 all the way above 2000 in a blink of an eye, right? In the blink of an eye, that obviously could not be sustained. And ever since then, we've seen some downward pressure on gold, short-term downtrend coming into that 200-day moving average. What's interesting, and we've been talking about this battle that takes place on the 200-day moving average, and we have seen that. Is this an area historically where you look at potentially coming in, dipping your toe in, buying gold, scaling in? How are you approaching gold as we've seen a little bit of weakness coming into that 200-day moving average?
Well, let's just go back, and I think scaling in is the real key here, Matt, is what you're saying. Dollar cost averaging in metals has worked better than any other technique. I don't care what anyone tells me. When you and I started talking years ago about buying gold back at 800 and just putting a little away and buying a little silver, if you recall, you and I put out an SOS buy at 12, 13, and 14 on silver, and everybody thought we were crazy. But, then when it went to 25, all of a sudden it didn't look so bad. But the thing is that, let's go to your point, which is, do we buy on dips? Absolutely. How much do we add? We add the same amount. We don't add more. We don't add less. Every month I get a paycheck. I put $500 aside. I buy a little bit of gold. I put it away, and I just continue to accumulate it. I tell people, for my oldest son, I started accumulating silver by the box of 500s to pay for, he went to Purdue for his undergraduate school. And I started buying it, $11, $12. When he went to school, I paid for all of his college the first year by taking those boxes out of the vault. I mean, the bottom line is dollar cost averaging works. There's no magic to it. I wish I could show you some sort of secret formula. But bottom line is, buying a small amount consistently over the years has proven to work.
Honestly, Pete, that sounds like a saving strategy, honestly, right?
Don't tell anybody that we're supposed to be crazy commodity brokers.
I know you're supposed to be the crazy people that are like storing gold and silver and all these things, craziness. But I mean, the reality, and I've been telling people this for years and years and years, is that you don't save money in money. Right. No, that's not a wise philosophy. You save money in asset classes, and the number one asset class to save money in my opinion, is precious metals, and specifically gold there. So I love the analysis of every 2 weeks when I get my paycheck, I put 3%, I put 1%, I put 5%, I put whatever that percentage is up to the individual. Mark, I know Pete is speaking your language there.
Oh,
right?
like listen, when he started talking dollar cost averaging, because it's something I preach.
Well, and also buying dips on all things precious metals.
Sure.
Really
I feel like I'm in church on a Sunday. I'm just listening with reverence and just absorbing.
Mark's giving a few amens,
Yeah.
like amen, Pete, amen, Pete, amen, Pete, amen. Buying dips, I love it. Amen.
And you know what? What's interesting is, guys, we've been doing this show for many, many years, and I know a lot of your followers who buy metal from me regularly have done very, very well with your advice. So, maybe all of a sudden I am Reverend Pete for the moment, but I will tell you this, that there's been no hocus pocus here. It's just been put the order in, we get it delivered, and as you guys remember, when there were massive shortages of metals, we were some of the few people that were able to deliver because of our network and the people that we represent. So your guys were calling in going, I can't find metal anywhere. And
yet, Pete,
Matt
you found
said to call you guys, and we were shipping.
Yeah, you were shipping, and that was especially true on silver back a few months ago, right? Really big on silver, and yet,
remembered that.
And quite frankly, Pete, there's a reason I've trusted you guys for many, many, many years. There's a reason I send you guys all of my contacts for many, many years now, is because in this area of the market, you gotta trust people, because you're talking about physical delivery and physical ownership, right? Yeah, you got to have a certain amount of trust out there, and I trust Zaners, I trust Pete, and quite frankly, Pete, we've had a lot of great calls, and I am just happy to ride along your coattails, my friend, because your calls have been spot on. Gold here, I'm looking at this, and obviously relatively weak, but I do think you have to be looking at that 200-day moving average.
Yeah,
you have to be looking at that.
Number.
And Pete, it's like I was telling people in the halftime report for the last couple months. It's not like you're waiting on that 200-day moving average with gold and saying it's at that point I start investing. Absolutely.
Right.
No. It's that point you start looking to aggressively add to positions in dollar cost averaging, correct?
There you go. Absolutely.
All right.
And the thing is, it's a no-brainer. And by the way, let's be pragmatic here. You know, a lot of people can't afford to buy gold at $2,000 now. I mean, it has just shot up. You know, the guys that we told to buy it at 8 are looking at me going, "What do you mean 2,000?" That's where it's trading, you know.
But they're looking at scaling out a little bit, the bond at 8. I do have a question. Yeah, go ahead, Pete.
2,000 on the gold, Matt. Maybe you could go $25 on the silver.
I
start buying
agree.
some rolls of silver here. You know.
And I do want to get into silver here because I want to get your take on a specific trade setup on silver that I'm not seeing on specifically gold here in a second. But I do have a question to you on gold. Obviously, we're looking at dip mechanics, scaling in, dollar cost averaging here on gold. Sure. With the dollar recently, and we know the dollar and gold are a little bit diversified against one another, right? Dollar down, gold up, dollar up, gold down. The dollar has been in some fairly aggressive bearish mentality right now over the course. Especially recently with the pickup in momentum to the downside. I see the dollar's pain train continuing to a certain extent, helping out gold. You couple that with what is happening politically, right? Biden presidency. You couple that with more stimulus coming down the road.
Well put.
We know what the central bank is doing. Janet Yellen is going to be the new Treasury Secretary, and we know how dovish she can get with all things printing and borrowing and printing and borrowing. And what can I do more, print or borrow? Let's figure that one out, right? So with all this, gold sitting at that 200-day moving average, I don't know of a time where we've had more of a looser, easier monetary environment than the one we're currently going through. What's the upside potential? We know we're looking at it from a scaling in perspective right now, dipping that toe in, but what is the upside in, say, the first half of 2021 as we start to see a little bit of these monetary environments start to get a little bit more liberal?
All right. Well, as I see it, there's few sources that I trust that I can repeat their numbers, but the World Gold Council is one of them. And I read a pretty lengthy study this morning that was just released by them. So this is fresh for everyone. The World Gold Council said that they believe that there is an entirely untapped universe of gold buyers that are now looking at gold to invest in. They said that the gold market can increase by 38%. That was their quote this morning. You know what? That's a big number. So we have fresh potential buyers out there that are talking about coming to the
go
market.
About 24, 2,500 coin?
At least.
Yeah.
At least, yeah. And you remember, there's always a yin and a yang in gold. So let's look at both sides. Let's give a real fair picture to your people, because everything isn't all roses. We saw tremendous buying by not some, but pretty much all the global banks in the world. And I always keep an eye on who's doing what where. And all of the banks have been major buyers. And in the last 6 weeks, I would say, we're seeing some of the banks selling some of their holdings. That's the first time that's happened. So that's pressure. All right. Now, the question becomes, why are they doing it? We got some big COVID bills coming due, and a lot of people are saying, hey, we were buying this at 1,200, we're at 2,000. We've got so many billions of dollars here in revenues that we could take in. Maybe we'll start cashing in. That's what I'm thinking is happening. I think that's what this cap is we're seeing. Some big players are coming in here. We're not talking about speculators. We're talking about
banks.
Okay,
we're talking banks and states.
Yeah,
central banks and states.
And so I think that's a lot of quiet pressure that we're seeing, and I see that you guys don't. And I'm happy to share that with you. And I think that we're seeing a little bit more cap on this market, just due to the fact that when we see rallies, we'll see Kazakhstan, we'll see Russia, we'll see Bank of England, come in and say, hey, we've got a ton here, a ton there. we're looking for a buyer at, and I see those bids and offers, and you guys don't. And we've been seeing some downward pressure or capping pressure just due to the fact that a lot of these people need liquidity to fight this disease.
So basically, from a high level perspective, and see if you agree with this, Pete, in short-term analysis in the financial markets in 2020, there have been singular moments where you had speculators capitulate on gold to pay down margin requirements in other aggressive assets, right?
That's very
You're
well
talking about something a little bit very similar, but on a macro scale, right?
Yeah,
where
it is.
nations are paying down some debt to so basically Russia, China, the Eastern Bloc. You've had gold acquisition for decades now, right?
Yeah, a good solid 6 years of purchasing, and not in small numbers.
Yeah, and so you're talking about them simply unloading a little bit in the short term to offset some of the debt explosion we've seen in 2020 due to the pandemic, and that's what's causing a little bit of the short-term downward movement in trend we've seen in the last 2-3 months. Whereas where traditionally you would think, holy cow, all this money and debt we're going into should be a boom for gold. We haven't seen that in the last 3 months. We're seeing the same thing from a macro perspective, government central bank unloading a little bit in the short term to offset some of their debt explosion they had in 2020. That long-term analysis should start taking hold, though, as those debt are getting reallocated, because it's not like Putin's going to stop buying gold at Russia.
No, and not look at Putin's the greatest metals trader in the world. No, there's nobody better.
Putin, that's amazing to think about, because when you think about Putin, you think politics, right?
No.
I mean, but no, he's a cutthroat trader too.
He's a cutthroat businessman. He's a monster trader. He can trade crude with the best of them. Natural gas, get out of his way, because he will torch you. But I'll tell you what, he has been quietly accumulating platinum and palladium like there's no tomorrow, and a lot of it's been going right into the state vaults. And we've been seeing a little bit of metal coming out of there lately. And I think your analogy, Matt's probably one of the best I've heard.
Yeah, it just, that's what it reminds me of, right?
Yeah.
Just short term versus long term. You know, that seems like a good transition there into the industrial metals, platinum, palladium, and silver specifically. You know, you mentioned the little brother of silver to gold here. You know, gold has been showing, whereas gold has been showing that weakness coming all the way down into that 200-day moving average. Silver, on the other hand, had a little bit of a bigger blow off top in August than gold did. It also has not contracted as much. It showed a little bit more of a defensive nature above the 200-day moving average with the double bottom at 22. I like silver here, but I'm a little hesitant underneath 26 in this neutrality. I like it above 26 to 30. Where do you see silver at?
Well, I'll tell you what I see. I see the Green New Deal is driving this. We're seeing a tremendous amount of potential usage for the colloidal suspension involving silver to make your solar cells. In order to get into a lot of these green products, including cars, including electric trucks, we're going to need a lot of silver. You create silver solder in order to get the proper electrical passage, what's referred to as the R factor. It has a lower R factor, less resistance, higher electrical passage. So what's happening is, remember, a lot of people forget silver wears two faces. It wears the industrial usage as well as the precious metals faces, and it can be very fickle. So there's a lot of people saying, wait a minute, I just saw a nice break in silver, and I know it's going to be used in wind farms. I know it's going to be used in electric trucks. I know that the Chinese are going to be creating a tremendous amount of solar cells with it. So we're seeing that kind of buying, and not in small numbers. I'm also seeing guys that I work with that do, for example, silver wire. They do extruded silver wire by the ton, and their orders are still fairly strong. So to talk about silver, we have to look at both sides, and the underlying side has been the industrial side, and we're seeing good purchases in there. So
let's take a look at the.
Why isn't it lower? I think that's it.
Yeah,
I got a question for Pete on silver. All right, so for the last several months, we've seen silver and gold trade almost in tandem on the movement up and down on
Okay.
any given day. That's not always the case with silver and gold historically. I mean,
Right.
you see what you're talking about, maybe breaking that so they start to trade independently, like where there might, not
Yeah.
trade so much hand in hand.
Well, I think that you're always going to have divergence. All right. You have, for example, when the stock market had its big break and we had margin calls, which Matt alluded to earlier, you see guys selling their gold and silver much more rapidly coming out of their ETFs. Now, the smaller player has to meet that margin call quicker. What does he have to do? He has to go to the good investment. You always sell off a good investment to pay a bad investment. That's the rule. So what happened? We saw silver get crash and burn harder initially because we saw people having to meet that margin call and they were selling off their silver ETFs holdings much more quickly than they were their gold. And I believe that is it. Also, Yvonne Lee at Bloomberg just wrote a divergence article between copper and gold. I'm going to give her a little plug here, guys. You have to excuse me, but it was done by Bloomberg. It's an excellent analysis of divergence between an industrial metal and an investment metal. So I'll send you the link for that.
Yeah, please do. We'll put it in the recap of the podcast so that people can, because I also would like to see that.
Yeah.
I do have a question. You mentioned silver. Sometimes you got to separate the precious metal analysis from the environmental impact analysis, right? And silver is part of that role in the ESG movement, right?
Yeah.
Whereas earlier this year, you saw Larry Fink of BlackRock literally state, we're basically moving out to a certain extent over the next decade of the fossil fuels, and we're looking at ESG type, clean tech movement. The environmental, social, and governance movement, I do believe is real. Whether you believe in it or not is a different story, but I do believe it's real in terms of the market. I think it's real in terms of what states are doing, especially when you're looking at Malaysia and Singapore and India and, some of those Asian areas of the market as well. The ESG movement, when we think about it, we do think about it in terms of, Tesla, and we think about it in terms of Google, and we think about it in terms of your solar companies and your water companies and your, those ESG companies that have, high ratings in there. But silver, and I never really put silver into the ESG movement because I think about it more as just an industrial metal infrastructure type play. But that does make some sense because, Tesla, so what Singapore does is fairly important to Tesla analysis, right?
Of course it does. And they're talking what? They want to go completely electric automobiles 2025 by law. They just passed that last year. So they're very serious about it. So the question becomes, which metals? Now remember, in an automobile, Matt, we have 40 pounds of copper. In an electric car, we have 120 pounds of copper. By the way, there's a lot of silver in there for all of those circuit boards that they're using. So it goes to your point. We're seeing much, much greater consumption of silver by those markets, which you normally wouldn't think are involved in it. So that's a good analysis.
And I guess I know there's a lot of people that want some ESG component in their portfolio, right?
Sure, absolutely.
Whereas you're talking 10% of portfolio, 20%, whatever it is, people are now starting to talk about ESG like that. I want X% of my portfolio in that social governance, environmental type movement, that clean tech movement and whatnot. Can silver, in your opinion, if let's say I want 10% of portfolio in ESG, can silver make up some of that?
Why shouldn't it?
I think it can too.
I like what you're saying. I understand what you're saying. I don't think it is as strong as possibly owning a windmill stock, something like that.
Yeah.
But I will concur with you in that having some physical silver, as far as we were just talking about with the dollar cost averaging program, will still allow you to participate in that movement. I like where you're going with this.
Well, and speaking of some of those metals, you mentioned copper here, Pete.
Yeah.
Copper's been absolutely on fire, or literally post-pandemic, copper's been on fire. You know, FCX has been a great play there. Copper's been a great play. You've seen nothing but strength in copper. Over the last week or so, you've seen some consolidation in copper.
Bit, yeah.
I think this is actually fairly positive for copper moving on into the future. I like copper here, and I think copper has a chance to get into the 3.7, 3.8 type technical barriers. When you're looking at it from a longer term perspective, you see nothing but strength and momentum. Now, obviously, anything can really kind of stop that. I don't see anything historically till you get into the 3.7, 5.3.8 from a technical perspective. Talk me out of it, Pete. I like it above 3.5, and I like it going into 3.7, 3.75.
Well, let's just go to my roots in order to give your investors an overview. All right, and we have scrappers and recyclers that are a big part of our business and are very good friends of ours and have been for years. And as we're seeing it, we have one of the largest scrappers in the entire central states, and he's telling us he's added at least 6 tractor trailers to his, and those things aren't cheap. They're $300,000-$400,000 a pop, and they're just expanding and expanding, and demand for, they're crushing cars, they're stripping wire, they're running, and as fast as they can move it. And the Chinese purchasing has done nothing but increase. So we're seeing it on both sides. We're seeing the metal being exported and the demand at the base, real base metal, where we're taking it out of old cars, we're taking it out of destroyed TVs, whatever it happens to be. Our guys are recycling this metal and the demand is strong. So what you're saying is, from the real bare bones metal of it, is, hey, guys are buying it, it's moving out of the yards, and demand is strong, and they're taking it in as fast as they can get it. So realistically, we're seeing a strong underlying copper market.
I do have a little bit of a weird question for you on that one, Pete, because I agree with that. We're seeing the demand pick up here. We're seeing strength galore in copper. Right. It goes without saying that all commodity investing starts with dip mechanics. Like, we love metals on dips, we love commodities on dips, we love oils on dips, all that. At what point do you start getting a little too concerned of price appreciation?
All right. As you guys know, I was on the trading floor and held a deck in the silver pit for when silver went from $5 to $50. All right. Yeah. So I have a little background on as far as an overheated market goes. Yeah. And for 15 weeks, silver's bullish consensus, which is the consensus of all the brokers pooled, was 100%. Mm-hmm. You know, we just kept looking at the sheet going, this can't be right. Every broker in America wants to own silver every week, week after week. So that's one of the numbers that over the years, I don't quite pay too much attention to. I mean, if a market breaks out and makes new highs, I go, I want to own some more. Yep. That's just how I am. And the question is, when are we going to get a pullback? If I knew that, guys, you know, I'd definitely be wearing a halo right now. I have no idea. I'm the same as you are. I mean, at what point does a market get tired or get into what our technicians refer to as an exhaustion gap? We have no idea. All I know is right now, underlying demand is strong, and we're seeing it going out of the yards as fast as it's coming in.
Yeah, and more than anything, Pete, like, I do not have concerns. I don't think this is an over elevated market. I don't think it's an overheated market. I still think it has room to run. I do have a price target on a breakout of 375. So
so you believe in dead Italian mathematicians, huh?
I do.
Didn't mean to bust you, my old friend.
more than anything, Pete, I just wanted secondary confirmation from you. I speaking of book a little bit. That's it. Just speaking of book a little bit.
All right.
But I do like it. Switching on
Yeah.
to platinum and all things palladium here. Let's first start with PL
Sure.
here, Pete. If I can get my toss, it wants to have a mind of its own here today. Let's start with platinum though. Platinum, platinum and palladium do have a tendency to run a little bit together, but we are seeing some separation here in platinum, especially in the last month. Pete, what is happening in platinum specifically to see the type of momentum we're seeing in platinum that we are not seeing in anything other than copper right now?
Well, let's start. First off, we have to talk about the two of them together, but palladium had a stronger run ahead of platinum. So the PA had that real strong run and continued to go for a long time. So everybody was saying, platinum, who cares? We're not using it as much. Our recovery ratios are lower. But what happened was that we started seeing electrical shortages in South Africa. Mm-hmm. And all of a sudden, they weren't able to mine as much as they were mining. Remember that you cannot mine without pumping oxygen down into those mines. And you're either doing it with number 2 diesel engines or electrical engines. Well, if you've got a rolling blackout and you're running on electricity, now you got to switch over to your diesel engines. You have to have, a secondary safety consideration for your workers. And it adds a lot of cost to it. And we started seeing prices coming up just due to the fact that it was more difficult to get the product out. Also, remember, those mines in South Africa have been yielding for 120 years. Yeah. At some point, those veins are going to start yielding less. And those numbers are coming down, more in palladium than in platinum. So pragmatically, we have to look at Russia. And Russia has been stockpiling a lot of their numbers. We're not seeing as much product coming out of Russia as we'd like to. So subsequently, palladium and platinum have both been in demand, less product around, more costly to produce, and tougher to recycle. We're seeing a lot of our guys from our recycling camps that hedge with us on the Zaner Tornado platform, which is the number one hedging platform that I know of. And the guys that come in and hedge on that, we're seeing them hedging actively because they're crushing as many autocats as they can. And those yields have really been holding this market up for some time. The question becomes, why is platinum not as fast going up as palladium in my mind? And now all of a sudden it's starting, as you said, to pick up a little energy here, is to get people are saying, you know what, platinum looks a little interesting to me here. Palladium's already at these higher levels. Mm-hmm. Maybe I'm gonna dip my toe into this platinum market.
Well, and that's kind of what I'm seeing a little bit when I look at these longer term charts here. You look at silver on the longer term chart. Let's look at on the 3-year weekly. You have good price appreciation, especially year to date. You have some consolidation with the snapback retracement here. When you're looking at PA palladium, really good consistent long term trend. A little bit of consolidation this year. When you're looking at platinum here, it's been really kind of stuck in a range over the last few years, and especially when you look at the last 10 years.
10 years,
platinum 10 years ago was $1,800. So this is one of those industrial metals that has really been held back. Is this something I'm seeing some bottom feeding analysis where this potentially could catch up? We're talking 10 years that this is a metal that's been underperforming. It's only been in the last month where it's been outperforming. Is this something? My question to you, Pete, is this something that is just starting that can have a little bit of more prolonged impact?
Well, I really like the way you put the analogy too, because what's important is about a month and a half, 2 months ago, I put out pretty much similar chart to what we're looking at here. And it's important for your followers to take a real hard look at that, because realistically, the growth potential is far more in platinum, in my opinion, than anything else. We could go from $1,000 to $2,000 with much less effort and the potential is there. And I believe that if we continue to see shortages of this product, we see a new increase in demand for it in such things as hydrogen oxygen separation on membranes, for example. And if those increase in demand, which we're seeing a massive increase in China, this has a tremendous amount of growth potential for your long-term investors, Matt, that follow your club.
Well, and I think people that are just new to the market over the last few years, Pete, they look at platinum, especially in the metals, they look at platinum and it's like, why touch this metal? It's been doing nothing for, well, it's been doing a lot. It's range bound between 500 and 1,000, but
right.
I'm talking long-term analysis,
yeah.
especially in relationship to silver and palladium. My interest is peaked here.
Yeah.
It's peaked from what you're talking about, but it's also peaked from a technical perspective, just traditional bottom feeding technical analysis here. This is a market that really does have a good defensive nature underneath that $1,000 mark, real range bound between that 800 and 1,000 range. There's not a lot above that, 1,000 mark. We'll call it we'll call it 1,020. It broke out of that last week. Today, I know it's just one day here today, but it snapped back, tested that 1,000 level. It's holding here.
The rallies have been just brutal. If you were short, you just got crucified.
Well, that if you're short platinum, you're looking at this saying, there's no way I want to be short platinum. And when there's no way you want to be short something, you got to think about the buying opportunity to a certain extent there. I think this is a question coming into 2021 and which will play out in 2021. Can ultimately platinum be that metal that plays a little bit of a catch up because it has been bottom feeding for so long? I like what I'm seeing in platinum. The question ultimately, can it continue? We'll wait to see that.
We'll have to wait and see. But demand, there's new markets opening up that we discussed earlier in the show, which I think are even bigger on the platinum side. And you know what? I'm kind of old school. When I go to the bank and I go to buy a CD and the guy says, we'll give you 0.2, and I look at platinum or palladium and it goes up from $500 to 1,000. I kind of look at the returns and go, kind of like where I'm at with my metals. I think I'm going to stay there, Maybe I'm silly, but I just kind of like what I'm looking at,
Yeah, I like what works.
Yeah, exactly.
I like what works. Pete, first and foremost, thank you so much for all things analysis in these major metals. But I do know that our listeners love those micro analysis, like your call on cobalt, right?
Yeah.
What are you seeing in the belly, in the underbelly of the metals market right now? Obviously, all of us analyze platinum, palladium, gold, silver, copper. Those are your 5 core ones.
We get into some of the more obscure stuff, which we do our best to get our hands on, which is iridium, rhodium, things of that nature. The rare earths, which come from North Korea, go through via China. A lot of rare earths that come out of Africa, which are very difficult to get a hold of. As you know, I stopped Zaner from buying metals out of Africa due to the fact that we could not verify that it didn't have child labor, it didn't have slave labor.
One of the things I love about Zaners is they do take into account that type of thing because, once again, when you're dealing with the metals market, you're dealing with sometimes some nasty underbelly stuff. So it means something to me, Pete, that you concern yourselves with that type of analysis.
Well, thank you. It's the right thing to do. That's all. It's just the right thing to do, and we do it that way. But the thing is that I believe that long term, if my kids were going back to school again and I had some long term stuff, I wouldn't mind picking up some platinum coins to put into my 401k, into my college savings fund, my IRA Roth. I mean, I could see putting them in for the long term, looking at $1,000, $1,200 coins with the idea that there's a really, really good chance that we could see $2,000, and it's all speculation on my point, but I'm just looking at the demand, and the demand looks Pretty
Listen,
strong and long term.
you know, I love it when you always hear speculation. You know, we say that word right all the
Yeah.
time, but when somebody like a Pete Thomas speculates, it's a little bit different than when somebody else speculates, right?
Yeah.
It's based on 40 years of history and understanding and action and knowledge. So I just, maybe it's a little bit of a nothing burger, but like that word speculation does mean differently when it comes from someone like you versus somebody on the street saying, yeah, gold, Bitcoin's going to $180,000 a coin. Like, okay, dude, keep that hopium alive. That's not an actual precious metal though. So, you know, I'd love it, Pete. Thank you so much for coming on the
My
pod.
pleasure.
Pete, two last questions for you. Number
Sure.
one, give me your final thoughts going into the end of the year. How do you feel like the end of the year is going to play out in all things precious metals markets? Any final thoughts? And then secondary, Pete, how do people get a hold of you? We know our community loves you. They love Pete Thomas coming onto the podcast. They love your analysis. They trust you. They trust
taking care of the
Zaner's.
justice people for many, many years. Zaner's been there for 40 years, guys. We've been, you know, we're all federally licensed. We all got our fingerprints taken, our pictures done. Where, you know, it's not
They
like
got NSA files, guys. That's what they got.
Absolutely. But I believe that a lot of our people have done really, really well, and I think that things just look really, really good. I never have a problem with, if you're coming into the year end and with the COVID and bills have been hard, you've been getting hurt. Maybe it's not a bad idea to take some profit for the end of the year, clean up some of this heavy debt that you might be in front of. And if not, start thinking about buying some of the smaller metals. Start thinking about getting into silver again. And let's start thinking about, now that the year is closing out, maybe saying to yourself, hey, it's time to do a dollar cost averaging. I'll buy a roll of silver now and again. I'll put it back and I'll just drop it in my safety deposit box. I'll have Zaner store it for me if I want, whatever it takes. And I think that maybe that's what I would do at the year end, would be just say to myself, I'm going to start a savings program in metal. Maybe not all of my check, a small amount, and hopefully that'll give them some benefits going into next year, man.
You know, quite frankly, Pete, you know, we're coming into the end of the year and it's been a crazy 2020. That goes without saying.
Yeah.
One of those years historically, we'll look back and just always remember, right? But when you're looking at silver's up 30% on the year, even with the dip all the way down to $11 earlier in the year. Silver's up 30% on the year.
38% in gold. It's hard to argue, right?
38% gold. I mean, it's been, and this is with the weakness over the last 3 to 4 months, right? So you know, not a bad idea. It's been a tough year for a lot of people.
Yeah, it's been a tough year for a lot of people. And if you're out there suffering and you're looking at some bills and you're holding some metal, maybe you want to take a little bit off the table, or maybe you want to move from gold into platinum or gold into silver, take a little savings and pay off some of those big debts, you know?
And I got a creative thing here, guys. Maybe, just hypothetically, maybe you've been taking advantage of the precious metals more from a digital perspective instead of a physical perspective. Maybe lock in some of that digital profit, it's fake money, and buy something real with it called actual precious metals from Pete Thomas and the Zaner Corporation. Make that, give Christmas presents with your profitability. Platinum coins, gold coins, silver coins, platinum coins, bars, you name it. Pete Thomas, Zaner's, they will take care of you guys. I've trusted them for 15 years. I literally sent my mother to Pete Thomas.
And she has no clue what she is doing. Yeah.
She has no clue what she's doing, but Pete takes care of her. I trust Pete.
Mom calls me up and goes, Matt says I'm supposed to call you. I need this. I go, okay.
Okay, we can do it. 20,000 of gold. You sure, Kathy? Kathy's like, I have no clue. Pete says, I'll take care of it. That's how much I love Pete and Zaner's, guys. So for all your metal needs over the holidays, one thing I started doing many years ago, Pete, is I started giving silver eagles to my nieces and my nephews as a gift.
Yeah.
And it was just to get them to start thinking about what these coins are, get their parents to think about what these coins are. Holiday season is coming. Give a gift of a coin. Give something real, something
quick story, because I know your people love my stories, right? Yeah. I gave all my kids these Christmas Bear silver coins, are collector's items. They
Yeah.
were stamped, and I gave them all sets of them, right? And I'm hearing all this noise in my basement. I'm like going, what the heck is going on, right? I go down, and they've got all the silver coins, and they got their hockey sticks out, and they're shooting them into the net across the basement floor, wearing the faces off all the coins. They're just
It's kind of a hockey puck. You get, hey, my brother Tim gave me this coin for Christmas one year. It was this, it's a 5-ounce silver coin from Australia.
Yeah.
And it's got the snake on the back. It's kind of a collector silver coin.
It is a collector's item. Yeah, sure.
And I love that. But Pete, it's about the same size of a hockey puck. I could definitely see that happening. So,
I was so mad.
I know. For me, like, I'd be like, "What are you doing?" Like,
oh no, I'm dead lost. It, believe me,
But then I'm like, it's still good.
Yeah, I mean, it had meltdown value after that, but as far as collectors, it was gone.
The beautiful thing about silver and gold coins, platinum and things, they can wear and they're still valuable. It's not like a baseball card that unless it's in mint condition, same weight, same usage. Absolutely love it. See, Pete, that's good for somebody like me who literally destroys everything. That's just So, like, Tim calls me a bull in a china shop, and he is pretty accurate on that one. So I do love those precious metals. But Pete, thank you so much for coming.
Always a pleasure.
Really appreciate
let's do it again next year. Let's hopefully we can continue to give good advice to your people.
What I'm hoping, and if you'll agree, about once a quarter we bring you on and give an update on all things metals.
Yep.
Awesome. Pete Thomas, All Things Zaners Corporation, All Things Metals. Thank you so much for coming on the podcast.
Always a pleasure.
Yep. And we'll be back with more of the Trade Justice after these messages from Coach Mark.